Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Tuesday, and it's earnings season, and wow, it is not looking good for a lot of stocks. I mean, we had Walmart report yesterday evening, and they missed, and so it's going to be hairy here because I think this may be sort of the beginning of a sort of a downward trend in both the S&P and the Nasdaq. I think the Nasdaq is probably going to be hit a little bit harder than the S&P, but I think they're both. I think we're going to have situations in both of them. So, not exactly the greatest news. I wish I had better news for you here. We are probably going to be moving lower in the market. I have moved out of a lot of positions. The small portfolio, I liquidated it. Basically, the last one I had. So I am all in cash in the small portfolio. I do have one small position long, but everything else is short, and I do have some shorts. I've been closing shorts as well. I'm basically trying to figure out, what the direction of the market is. And I do believe, we're going to go lower here. This was as of midday. The Dow was off, S&P was off, Nasdaq was off, and the Russell was off. So we're basically 444 down. Not looking terrifically great there, but hey, it is what it is. So just not the time to be entering the market. I saw this very interesting article by Jim Rogers. Now, I'm not necessarily the greatest fan in the world of Jim Rogers. I think he's a little bit of I don't know, whatever. But he did say this, and I think this is worth noting because, he's been around an awful long time, and he's been very, very successful. And basically, he basically thinks it's going to be one of the worst bear markets of his life. And he's been around an awful long time. I think he's in his 80s now, if I'm not mistaken. And he originally paired up, obviously, with Soros back in the early days with Quantum Fund, and had one of the most successful runs of all time. So not really the best thing to put out there for everyone. Bitcoin is continuing to be in problems. Bitcoin is continuing to have problems. The problems with Bitcoin really are due to the fact that the exchanges just are not liquid enough to exchange all of the Bitcoin. Voyager went down, and some of the other ones went down. Of course, I've been kind of a little bit shy of Coinbase and those kind of things for a while, but Coinbase looks like it's going to be investigated by the feds. I tell you, when it gets bad, it gets really bad. I'm glad that I did own Coinbase when it came out. I basically sold it within about 30 minutes after it came out. It did. Coinbase did move up a little bit today, just slightly, not a whole lot. It's down to 52.93, and if you look at it, on the history of this thing, it looks like, look at that, just straight down, all the way down, really from about 400. I actually bought it on the first day. I sold it up around, I bought it, I let it ride, and I sold it about 30 minutes later, and I haven't touched it since. I'm glad I have done it that way. Been around about 2 years, and as you can see, if you invested initially in Coinbase at about 400, you would be you'd be down to about 5% of its value. So not looking very good. Coinbase is going to be under extreme pressure, I believe, here, because I do think they're going to have the feds are going to investigate them, because they're not going to be able to redeem. I don't think they're going to be able to redeem everybody that has Bitcoin. I don't think they're going to be able to do it. Currently, I'm all cash. I have nothing. I've sold all my positions. Unfortunately, for losses, they were pretty tight stop losses, about 3% down. Really, in this market, you just have to really just put your toe in the water very, very carefully. And then if you're down more than, just a few percentage, you just have to sell. And that's what I did. I was down about 3.5% on all the positions. And so I just liquidated for cash. I'm glad I did because it's continuing to move down. So not a really great thing to be in. I think we're just going to probably, we're probably going to have to be mostly in cash. At least that's what I'm seeing. There are some shorting opportunities, but I am monitoring the market. Obviously, I want to stay engaged, but right now, just really tough because I do see, making a move, making a move lower. Let's just go over some of the major indexes first. Let's look at the Nasdaq, and I'm going to go actually to the Nasdaq actual here on this to basically to show it. So let's kind of see where that's moving. This is the Nasdaq Composite. This is everything that's basically in the Nasdaq. So basically, what's happening here, and this is looking at the weekly chart. We're down basically to the 200-day line, and it looks like we're down significantly, about 2.29%. And I do believe that we're going to see probably some more damage. We were in this nice rally, but this is the 1, 2, 3. So it started really moving. The Nasdaq really started moving against us on Friday, and then Monday it's down, and then today it's down. And one thing I am looking at, of course, is the relative strength line, and that is pointed down. So I do expect at least during this earnings season that we're going to see a fair amount of pain here. So let's look at kind of what kicked off the earnings, and that was Walmart, WMT. I want to analyze that because I think it's a very, very key stock. The reason, not because I'm such a big person on a retail, but Walmart, the retail part of the economy is very, very significant, and this is really something that you really have to take a look at because it dropped really all the way from here. We were up here at about 131, and then boom, all the way down. The numbers were not good. 121. This is a significant drop. I mean, it dropped 7%, and this is not a small stock. This is not a growth stock. This is basically a snapshot of the American economy, and it's not looking good. it's not looking good. I mean, we're gonna, with a drop like this, I think it's time to basically be very, very cautious in the market. I mean, I tried to open positions, but this kind of drop in a stock like Walmart, which basically sells everything. I mean, they sell gasoline here in Texas. They also sell, just about everything that you could imagine. Walmart sells. The American consumer is not feeling good. The American consumer doesn't have money, and I think it's going to be very, very tough. Now, oddly enough, one of the best performing assets out there right now is cash. You wouldn't think so with all this inflation, but there's two things going on in the economy, I believe. And one of the first things that going on in the economy, of course, is the inflation that everyone's talking about. But that's consumer price inflation. That's inflation in things like commodities, food, rent, that kind of thing. There's another thing that's going on in the market, and this is why we have stagflation and not inflation, and that is asset destruction. What's starting to happen is you're starting to see assets like real estate and stocks and those kind of things. They're in starting at a beginning of deflation. So what's happening is that asset prices are deflating while commodity prices and living expenses are inflating. So really, in this situation, this is sort of what I've done personally. If you possibly can, and again, I don't have a crystal ball here, but if you possibly can, the best position to be in right now is to basically pay off your credit cards. If you can pay off your mortgage, that's a good thing to do. I did that. I was fortunate. Also, if you can, be very, very careful in terms of your spending right now, because I do think it's probably going to get a little worse than it is currently. So, just not fun. Just not fun in any way. Let's get to some of the questions. Thank you so much for holding on. So appreciate that. Let's look at this ETF UVXY. Yeah, let's take a look at it really quick. UVXY. And let's see if we've got, ultra short. And this is up nicely. Look at that. Wow, 24%, up about 40%. I don't know. It's tough. ETF records half of the performance of the VIX. So that's good because the VIX is pretty volatile. and this one might be kind of a good way to go. I don't really have anything to judge this on, but I do know that the VIX has been, it's been running. Let me see if I can. Let me see if I can get a. Let me see if I can actually get a chart of the VIX here up. See if it's out there. Okay, so this is the VIX CBOE based on the index. This is not. This is actually the VIX itself. This is the VIX itself on a daily basis. Let's kind of go out. Let's zoom out here a little bit to the weekly chart, and as you can see, the volatility had been moving down until about December, and then it started moving back up. Let's go to the daily to see kind of if, yeah, boy, it's really all over the place here. But as the S&P 500 has been moving lower, the relative strength is all over the place. So I don't know. It's tough. It's a tough one to say. I can't really give you very good information on this one, but it is a way to play volatility. I think actually volatility is going to be relatively low. I think that we're going to see the market move lower, but I don't think that we're going to, volatility may be, may not be moving lower. I want to look at the spider, and of course, what the spider is, and this is SPY is the symbol for that, is it's the S&P 500 ETF that basically is that covers basically all of the S&P 500, and this is a good gauge. This is a little bit more broad-based index, and it does kind of give a good look see at. Let's add that. There we go, and kind of see what's been going on the daily basis. Well, yeah, we're starting to see the S&P move lower. We did have a little bit of a bounce after hours. That's very interesting. But look at that. We were down about 1.5%. Not a whole lot, but I do think I am seeing this basically. We went down on the first leg here through May, and then we rallied down the second time, rally, and then kind of went a little bit sideways here. We rallied up, but I think we're going to, unfortunately, the next leg is down, and I'm looking at possibly, on this leg down, possibly as low as 360 on the S&P 500. So I think it's going to be a tough time to play the market right now. Again, I'm being very, very cautious myself. All right, is it time? Is it time to enter? Absolutely not. Right now, it's time to be in cash. I wish I could say this would be a good time to enter, but I just don't see a whole lot of good stuff on the horizon right now. I see a lot of pain. What I want to do here is I want to compare, and my real mark here, of course, was the price of Walmart, because Walmart is such an important stock in the economy. Because so many people, it really is a proxy for retail investment. I mean, not retail investment, retail sales. And so that's why the fact that it had so much trouble has really shown kind of where we're at in the market. I want to show you Walmart against the S&P 500. It kind of follows very closely. Let's kind of get that chart up here. Yeah, there we go. This is Walmart, of course, is a little bit underperforming of the spider. But if we look at, let's look at one of the energy sectors, the XLE, and kind of look at that as well. You can see how much better, unfortunately, how much better the energy sector, even with its little bit of sell-off, has performed, at least on a year-to-date basis, than Walmart or the overall spider. So basically what we're seeing here again is not asset inflation. We are seeing commodity inflation. And that's what's driving the market, commodity inflation. So the question is, will that continue into the future? I don't know. I think that, energy prices may moderate a little bit, but I do expect, at least in terms of commodities, I do expect that we're going to see a lot more pain. And that's just kind of the long and the short of it. All right, let's take a look at CNC. To see what's going on. Let's see what's going on there. So CNC. And there we go. Centene Corporation. This is in the healthcare area, obviously, and healthcare has been one of the bright lights. One of the few areas that has continued to do well. It's above the buy point right now. It's a little bit extended. I wouldn't buy it here only because, not because it's not a good stock. It is. Had a very nice move today, up about 1.3% with increase in volume. The problem I have here is it's just a little bit too far away from that very critical pivot, which is at 87.34, which is right here. So I don't, this is a good stock, but I wouldn't buy it, even though we do have some very nice volume. People are coming in, but they had very, very good earnings. But the thing is, I think it's extended, and if you bought it here, it's very likely it's going to pull back to that 87 line. So I would put this on a watch list basis, but I would not be I would not be a buyer of this one at this level just because it's extended. So Centene, CNC is extended. So no buy at this level. Wait for pullback. So that's kind of what that's kind of what I would be. That's kind of what I would be looking at, is waiting for that pullback. To possibly buy it, but right now I just don't think you can buy Centene. So Centene, CNC is extended. So I would be very, very careful here about buying at this level, just because I think it's going to pull back probably to about the 87.34 line. So it's a good stock. I'm not trying to rag on it. It's got good earnings. It had an excellent it had excellent earnings, which is more than you can say for a lot of the other stocks. But I think it's just really not there right now, unfortunately. Unfortunately. All right, let's take another question from somebody that hasn't had a chance yet. I'm shorting Chewy. Good idea. That's interesting. Let's see. Chewy is what? CW. I think it probably is. I have a short on Snow and what other one? Can't forget. I've closed so many of this. I definitely have a short on Snow, but let's look at I think CWEY. I think it's Chewy. Yeah, is that right? GWEY. Oh, let me just get the symbol for Chewy here. And what I'm doing is I'm just looking it up. Class A of Chewy. Oh, come on. CHWY. Why I couldn't remember that, I don't know, but I couldn't remember it. So it's CHWY is the symbol. And I should know that offhand. Yeah, it's looking like Chewy might be a good short here, because it came all the way up to the 50-day line. Look at that. That's interesting. And now it's starting to retreat. Wow, look at that. It bounced a little bit after hours. It was down 8%. That's not a bad short, I don't think. Let's look at the weekly. I just kind of want to look at it. Oh yeah. I think you're going to get a nice short here. Yeah, actually, you know what? I agree with you. Yeah, this is looking pretty strong as a short. I don't know if you could. I don't know where you can. Here's what I would probably do on this one. I would do a spread on this one. Yeah, I definitely think that you're gonna. If this thing rallies to 40, which I don't know if it will, looks like it's rallying a little bit, I would short it again. It does look like this is shortable. This is a very key level that it came up to, and that's the 50-day line. I want to kind of look at the monthly chart on here, just kind of see. Yeah, there's a little bit of juice left here. I mean, it was all the way up at 120. It's not a tremendous amount of juice. I mean, it's about a third down. Yeah, but this thing was crazy when it came out of the gate. It went from about 23 on up to 120. That's a run of 100. That's a lot. So that's 1, 2. So at 5 times. So currently it's about okay. So I think it's got about. I think you could expect a drop of about 10, I'm going to actually write that down. That's a good one. I do think that you're going to probably get a good win on that one, Tony. I think you're right about it. I think you're right about it. I think it easily come down to about 30, and boy, I think that's good. I think that is a good idea. I think that is a good idea there, Tony. So I'm gonna put that up here. Yeah, that's a good idea. That's a good idea to short that. I think you're right on that. Oops, there we go. I think you're right on that. So good. So really good call there, Tony. Really appreciate you sharing that with everyone. I definitely agree with you. I think it is a good short. I would cover my short though if it came down. I would wait for it to. I don't know if you can do this, but I would wait to see if there was a rally up to about 40, and then I would cover my short at about 35 or 34. It's kind of where I'd cover it. Just look at it here. So, but yeah, I think that's coming down. So if this thing rallies to about 39 tomorrow, I think that would be an excellent short. 44 relative strength. It's in a bad area. It's in retail, which is going to be punished. So very good, very good. I really think that's excellent there. All right, so let's look at Google. And Google, of course, split. And if you've been listening to me for a while, you probably know that I indicated that typically in split, this is how they work. They are the most valuable the day of record, right before they actually split. So the best way, if you're in a decent market, and this hasn't been a decent market, is to buy the stock on announcement of split. You buy the stock, you wait until the day of record, you sell, and then after the split, that's usually when it starts coming down. There's other things that are affecting Google as well. It bounced strongly, but today. But let's look at the chart here. We were down about 2%. It's bounced 5%, but the trend is unmistakable, and the trend is lower. So I mean, it's going to get a little bit of a bounce here, but I think you're going to see it move lower. But it's bouncing after hours. It's up about 5.4%, which is significant. I don't think people are used to the price now because it did split 20 for 1. But let's see if this might be a good short. Yeah. I don't know. I think I would want to see it come up to I would want to see it come up to about the 21-day line. I don't think it is a good short right now, unfortunately. 112. If it rallies up to about 112, it might be a short, but I wouldn't do anything here. I wouldn't do anything here. I don't think it's I think there is a lot of selling though that's going on. Look at this. Yeah, we're starting to see a lot of selling coming in. So a lot of people are going to probably be selling their shares, but I guess some people are picking up ones after hours. It does not look very good though right now. All right. Also, railroad companies earning out this week. CNR, CP. So these are the Canadian railroads. There's a real problem with the railroads too. I mean, I'm just Mr. Problems today. There is a real problem with the railroads, and that is, I suspect that they're going to have some union strike activity, and that could be serious. But I think there's very very high likelihood of that kind of action, of labor action on them. But CP looks pretty good. I mean, I'm not currently in the railroads. I haven't really spent a lot of time analyzing them. It's not really my cup of tea, but it is in a consolidation. So the CP is in a consolidation, really from a bottom of about 66 on up to about 84, and it is. It was down a little bit today, very slightly. A lot of but I think there's going to be selling here too, because I think overall you're going to see some labor action. So I just, again, negative Nelly here, but transportation rail, it's not that good a sector right now. 129 out of 197. So really not the place to look for anything. So I would caution against it. just because it is one of those things where I don't think it's looking as good as as other areas. Let's kind of take a look at where the best areas are. Again, they're just in the old familiar ones. Now there is solar, which has been doing very very well. I'm a little bit leery about buying solar right now, just because the best performance right now, oil and gas royalty trust, and then biomedical. So not really that much change. It seems like oil may be making a move once again, but it's really a mixed bag. Um, you know, Media periodicals, retail, super mini markets. I just don't like hardly any of these areas at all. To be absolutely frank, I just don't like any of them. Maybe oil and gas royalty trust, and there's a few things in there. Let's just see if there's anything viable in royalty trust. The biggest one of the biggest stocks in there is a company called Texas Pacific, which is, but it's yeah, they're TPL Texas Pacific. Yeah, it's just really not anything that I really like. Now the problem with Texas Pacific, it's extremely expensive stock. Yeah, see, it's a $1,773 a share. It's up nicely after hours. This one is not in the buy range, but you know, it has been doing very well. I mean, look at the relative strength, 98. So I definitely think there's a lot of money flowing here, but unfortunately, it's big money, corporate money, and you really could only buy a few shares of it. So it doesn't look particularly good there as well. All right. SNDL did its 10-for-1 split. Great time for shorting. Yeah, yeah. You know what? You're right about that again, Tony. Very good idea. Very good, because typically you're right. After something splits, after the date of record, after it distributes the shares, that's usually when the stock will take a hit. So you're definitely on the right side of that. Now, why they did this, I don't know. Essentially, they made it into a penny stock. It is a marijuana stock, which I think possibly is shortable. I agree with you there. I just don't know. You could probably borrow the shares and short this one. Yeah, look at that. Look at how far down that went. Yeah, everybody's selling. 23% down in a day. I don't know. I think it's already made its run down, though. That's sort of my guess. That's sort of my guess here. I think it's kind of made its move down. So I don't think that that probably is as good a deal. So I probably would not be. I like your idea of Chewy, not so much with Sundale Growers. Not just my preference. Let's look at KR, and this is for Drunk Squidward. This is Kroger, and of course this is a food store. Here's the thing, with the results that Walmart had. I don't think this one is any better. As a matter of fact, I think it's worse because their prices are higher. If you just look at this is a downward trend, so I wouldn't buy this one. I wouldn't buy Kroger. Um, and so there we go. Yeah, I mean, I just wouldn't buy Kroger here. It's not really something I think you want to look at, because it's just not working as well. All right, so I'm gonna almost in the last here, because I'm gonna got a little bit of a short day today. I work for CPE, and train traffic has gone down a lot. Yeah, exactly. Being very stingy with supplies. Yeah, that's very interesting. Thank you for that, Troy. That's a very interesting what you're saying. I think there could be a labor action here, so I wouldn't recommend it, but I would recommend shorting Chewy. I think you're absolutely right about that. All right. Oh, I'm seeing. Okay, I'm sorry about this. Hold on one second. Sorry about that, everyone. I'm feeling a little bit under the weather, and I had to make an emergency trip to the bathroom. Sorry about that. Okay, let's get to your messages. So sorry about that. I just wanted to get through as many as I could. All right, let's look at EPD. Enterprise Product Partners, and this is gas, liquid transport. This is in a good area, looking very good. This is in a cut basis. Would I buy it here? Well, not a bad area. This would not be a bad place to buy it, as it comes above the 50-day line. It's above the 200, which is great. It's above the 50. Yeah, you know what? This might be. Yeah, I like this. Let's take a look at the checklist. Relatively weak checklist, but yeah, I think you could nibble here. I think you could. I think you could nibble with this one. So yeah, this is looking pretty good. Enterprise Partners. Oops, come on. There we go. Maybe start with a 1/4 position. So I think, yeah, 1/4 position here might work. You know, this might work. This is not a bad chart. This is a very, very good chart. It's in a good area. 15 out of 197. Pretty strong checklist. It is the minimum that I will do. So I definitely like this one. You know, I definitely think that you could definitely take a position in this one here. I've been in this one several times and not had the greatest luck, but I like this relative strength line. It's in a good area, gas liquefaction. You know, I think we're starting, you know, as the markets go down, I think we're going to start to see once again a movement, you know, back to the companies that are getting. Now there is one company that that I really like. I'm not in it, but I think that it's worth looking at instead of, and that's Cheniere, which is LNG, it's the symbol for Cheniere. This one is starting to work very, very well, and this one is getting ready to be in a buy point. Yeah, we just moved above a reversal line here. This is one that I think you could play for a swing trade. I don't think it's going to be a lot. I mean, I think it's going to be from about 144 up to about the pivot about 150. But I think that is a possibility. So this is another one that you might want to look at in terms of that. And it's Cheniere LNG. LNG. Yeah, I know. This is so frustrating. I know where you're going with this. It's so frustrating right now because I know you're screening hard and you're doing all the right things, but sometimes the market just is not being it's not working. And right now, that's one of the things that it's just not really working. All right, let's look at 5 and below, which I do like. I love this stock. I like the store. I'm just afraid of the overall market for retail. It does not look good to me. This is a little bit of a bounce after hours, but again, as goes Walmart, usually goes the retail. So I'd be super duper careful here. This is probably going to go down. I wouldn't short this though. Why? Because maybe you could short it. I don't know. It's come up to the 21. It's come up to the 50-day line. That looks good. And the only thing is that, well, no, that's true. That the 50-day moved below the 200-day. It's 16 relative strength. The only thing is discount variety has been a relatively strong area. I'd be careful shorting this, just because this area has been, even though I'm saying all these bad things about retail, this area has been, this area is in a strong, in the land of the blind, the one-eyed midget is king, and that's kind of the way this is. So I wouldn't do anything with this. I wouldn't short it. I wouldn't buy it long. Boy, not a really great Not a great hit. By the way, I can see your messages. I was sorry, I was taking other ones prior to this. All right, let's look at ADVABBY. Let's look at that. See what we got here. BBV. Come on. There we go. Okay. Unfortunate downward trend once again. The question is it reversing? Well, if we draw the reversal line, yes, barely. It looks like it's maybe heading up. I'd be very careful on this one too. If this was a stronger market, I would buy this. Absolutely, but I'm just so worried. We're 3 days in front of earnings. It's a relatively weak market. I mean, it's trying to make this move upwards. It's in this consolidation, but I don't see this being a buy. I don't see this being a buy either. Unfortunately, just not a good look. All right. Oh, thank you, Damien. Let's look at BPT. Prudhoe Bay Royalty Trust. This is, of course, in the top area, Royalty Trust. Of course, the big dog is TPC, that's TPL, Texas Pacific Land. This is a good one, though. This is the old. I think they have 16% of the resources, but it's again. You need to wait for a reversal on this one to buy it. It does have a 99 relative strength. It just is not in the right position to buy it. But if this starts reversing higher, and it looks like it may be, then you could buy it. I would see if it was strengthened a little bit and it could move above the 50-day line before buying it. So I wouldn't. I would watch this one. I would not buy it. Um, it would not buy it. We're relatively close to the 10-day line, so I just wouldn't buy this one. And it's just one of those situations. ACLS. That's probably the last ticker for right now. Look at it. ACLS. And, oh, baby. This is not a company I'm familiar with. I should be, but I am not. Semiconductors, yeah, I think you got to stay out of this area. So I would pass on this one. Yeah, I would pass on this one. Basically, today, really not a whole lot to buy. One that I think that you might want to look at is LNG. If you want to buy long, LNG, I think is set up well. And I also think the short Chewy. Thank you, Troy. That was a good call. I think that Cheniere is well set up. I think it's probably going to move higher. I think it's relatively low in the base. I don't think it's a home run, but I definitely think it's if you want to buy something long, this one probably would be where I'd go. Really, nothing much more. It looks like we're going to make a move back to energy. I'm pretty much all cash just because this market just is just too screwy for me. I mean, it's just so hard to trade. I liquidated all my positions, basically in the small portfolio. I'm all cash right now, waiting for an opportunity. I do think we're going to take another leg lower in the S&P. So that's one of the reasons why I'm trying to protect my capital right now. I do have some shorts on. One of them is in Snowflake. It's doing well. It's entered the area where it's starting to make money. Snowflake, and I think this one's going lower. I think this one's going lower. And of course, there was Troy's very not very good call on Chewy. See on Chewy, which I think is also shortable as well. Okay, well, thank you so much, everybody. I'm sorry that it was a little bit abbreviated today. I'll be back tomorrow at 5, and in the meantime, if you haven't liked if you could like the show, that would really help. Like and subscribe. That really helps me. So I'm like everybody else. So please like the show. There we go. And also, if you're not a member of Action Trade Alert, it's super easy to do. Just go to www.Dallas Trading Floor. And if you're watching on TikTok, just go to the link on my bio, click on that, first and last name and email address, and we'll get you all set up. I'll be back tomorrow at 5. Thanks again, everybody, for taking a look today. Happy trading, and hopefully, right now, be very, very conservative on your positions. I'm all in cash. I do have some shorts, but I'm basically in cash, and I think we're going to take another leg down here. So, it's just not a time to be very exposed to the market. I would recommend an exposure of less than 10% of your portfolio right now, just because I think we're going to take another leg down. Also, crypto, be very careful with crypto. If you do have some gains in crypto, you might want to consider starting to take them. I do think that crypto is likely to be weaker as well. So that's another one that I think that is likely to go down further. So I will see you tomorrow at 5 o'clock Central Time. Happy trading, everybody.